So, Larry, how does the U.S. economy stop itself from being intertwined with an economy, the world's second largest economy, that truly is paralyzed right now?
Well, look, I don't think, we're not going to decouple. Everybody knows that. And the tragedy here, I see it in human tolls. People catching this virus, many people dying. I guess new numbers out today were not good. That's, most regrettable. Incidentally, we've done what we can to help them. And I announced this 2 or 3 weeks ago. But finally, as you probably know, China has allowed U.S. CDC experts to go in with the World Health Organization experts. That's a good thing, and I hope it works. Now, coming back to our story here, I just want to raise this point. If you look at the Atlanta Fed GDP now, they're predicting a 2.6% increase in the first quarter. And that's a pretty big number because of what we've seen in China, 2.6%. Now, whether that number holds remains to be seen. I understand it fluctuates, but I think that's very promising. Second point, Jimmy, yesterday, as you know, we had very positive reports from the Philly Fed manufacturing and the New York Empire State manufacturing. And here's the key point. In both of those mid-month surveys, they did not find any major supply chain problems. Now, again, I know this could change. The first quarter has, a month plus to go. Right. But nonetheless, as early indicators, the GDP now and these ISM reports, and of course, at home, we're in a housing boom, as you well know. So I just think we should be very calm about the U.S. side of this story, which is actually looking pretty good. On the other hand, the Chinese side of the story is very difficult. It's a human tragedy. It will come to pass at some point, but I'm not smart enough to know when that is.
Larry, it's David. What does the 30-year all-time low yield of 1.89% say about this economy and the perception of it?
Well, look, I have to think, David, that is a run to safety. I have to think that. With respect to the outbreak of the virus in China, perhaps the worsening of the virus, I'm not an expert on that. Asia is obviously on red alert regarding the virus. We don't see too much in Europe. But I just think in general, I would be very careful to put too much emphasis on what bond rates are doing or interest rates are doing, or even in the short run, the stock market. I think you've got a lot of mood swings here, and I don't think it reflects the fundamentals.